Welcome to Build with Bitcoin. My name is Lynn Barista. I'm co-host of Build with Bitcoin together with Israel Munoz. And today we're really excited. We've got a special guest, Jeff Booth, with us today. And Jeff is not only one of the premier thought leaders and speakers about Bitcoin, he's the author of The Price of Tomorrow, which has been a way for many people to become introduced to how Bitcoin changes the financial system and why it's so important from a foundational standpoint. But he also previously was a founder of tech companies, and now he's devoting most of his time as the managing partner and founding partner of EcoDeath Capital, which invests in Bitcoin companies. So we get to talk with Jeff today about a wide range of topics, including his background and how he sees the space of investing in Bitcoin-related companies. Welcome, Jeff.
Yeah, thanks for having me.
Well, Jeff, I think to kick things off, I'm sure that most of our audience will be familiar with you, but, you know, The Price of Tomorrow is a seminal book for, I think, a lot of people coming to realize what the problem is in our system and how technology relates to money. And can you just start out a little bit with your background and how you came to be thinking about writing that book and what it's meant for you to have that book be so much a part of the Bitcoin ecosystem?
So I've always been an entrepreneur. I think and what does that mean? It means trying to provide value to somebody else and kind of solving a problem to provide value for somebody else is how I describe that process. And so I was early. I had a building company early. I went into real estate, then bought a real estate company, then started a building company. That led me to early in the internet building a company that tried to solve the building. Building is inherently products never come on time. It doesn't work. It's a broken industry. So I wanted to solve that problem, with technology. And so that became my first technology company that grew to a pretty decent size, and lots of learnings throughout that. But through that adventure, I got more and more curious that technology was in everything. It was in everything we were using. And the price falling or the increasing productivity of technology and what that would allow you to do. I couldn't understand why prices weren't falling everywhere in the world. So in our own business, their first piece of technology, kind of a routing, cubing, bin packing algorithms, and so you could move containers all around the world by bin packing them and cubing them and weights, dimensions, and all the different math that would go into that to understand how things would move across a supply chain. It cost integrated into a website, integrated into purchasing delivery system and everything else, cost about $5 million to build. And then 5-7 years later, it was free. And the 5-7 years later, obviously we kept on innovating it and it got better and better, but kind of the basic technology was free. And so you wondered, I wondered why, if that was happening in energy, if that was happening in if you look at a mine today, the mining is done largely by robots and trucks, driverless trucks, and this was happening in every single industry. Why weren't prices falling at the rate of productivity increasing? And it was something that was sticking with me as I was building that company. I just couldn't understand it, and I wanted to understand it. So I started to look deeper within the financial system and understanding it, and it left me. It left me. Oh my God. This is what's going to happen in the world, because technology is going to move faster and faster, and our existing financial system can't allow that productivity to flow to society in the form of lower prices. It has to steal that at an ever-increasing rate, which will lead to the divide of society, which will lead to wars and lead to where the world's going. And so I could see it so clearly. I would talk about this all the time. Too much, probably, like most Bitcoiners. When you get Bitcoin, you talk about it all the time to all your friends. But this was probably even before I got Bitcoin. I was talking about this, and there was no resolved the conflict. And so it was just, these are the systems, this is how it looks, and these systems are incongruent, incompatible together. One is a control system, one is a free market system, and they're completely incompatible together. And so through that, eventually, I decided to write the book that you mentioned, The Price of Tomorrow, because I worried, largely because I couldn't get people to listen to the thought. It was to such an abstract thought, and I couldn't get politicians to listen. I couldn't get anybody to listen to this, and I was talking about it all the time. And I realized that I had to write. I didn't want to write a book. I actually tried to get other people to write this book, but then I felt compelled to write the book because you could see the impact of most of kind of humanity living and operating in this system, and knowing full well that technology in the free market was deflationary, nodding their head to that, and then going back to the world they lived in. And so that's why I wrote the book. And then through that, at the end of the book, I only had a paragraph on Bitcoin as a plausible, or one of the possible alternative solutions. And so at that time, I'd almost, you needed to know the problem before you could understand the solution, right? So people will need to, it's hard to get Bitcoin until you know what it's solving. It's hard to get any business until you understand the problem it's solving. So the Price of Tomorrow described the problem and a potential solution. And then as I really tried to understand Bitcoin and go deeper and deeper and deeper, and actually try to kill Bitcoin through my own thought process, I realized it couldn't be killed, and moved more of my time and attention to it. So kind of that's my journey to get to here.
Jeff, so and it'd be great, I think, if we could drill down a little bit on what you just mentioned, the problem, right? Because I think you're one of the people who does a very good job detailing and explaining what that problem is. And you just explained the vast majority of it, but I just want to be clear that I'm understanding it correctly. You through your career as an entrepreneur working with supply chains and technology, you observe this productivity that leads to what should be lower prices, and you identified you linked that to a monetary problem, which is an inflating currency. That's basically what you identified, or is there more to it?
There's a lot more to it. That is a huge part of it. You found these silos, entrepreneurs and technology. We're going to create a better world. But every time they were doing that, the prices couldn't fall broadly. So you'd have to push up on the other end of the spectrum, prices of houses or others. So you had to misallocate capital so prices couldn't fall. Now, for the entrepreneur building tech, that could create a massive monopoly, and they could do well. But overall, the entire market had that monopoly had to come from stealing money from others, unfortunately, because the monetary system forced that. And maybe a different place to start. I say this so often, and I'm sorry for other people who watch my podcasts over and over to say, but the natural state of the free market is deflation, and it should be really intuitive, because we, as entrepreneurs or people working for entrepreneurs, any business, the output of what you do is reliant on giving value to somebody else. And what was there before, and that's always under threat of other people competing to give better value. That's what the entrepreneurial process is. And if they create, if an entrepreneur creates less value than what was there before, they go broke. And you, on the other side of that action, as a purchaser, are constantly searching the market for more value. So if Google tomorrow raised their prices to $5 a click, you would go elsewhere. This Riverside app that we're using, if it increases price beyond what someone else was, then you would go elsewhere. So there's a crazy competition to deliver more value in the free market. And so that comes, and then we trade with each other all over the world to gain more value. So the output of that, especially, and then we invent technology, which is just a name for creating more value. And and that technology allows us to create even more value. So all of these different things we do to solve problems create exponential value on top of value on top of value. And that exponential value should be flowing to all of us in the form of lower prices. And if you just pull on that thread, if you nod your head to yes, that's true, then all of economics, all of political systems that stop that is not anything about economics. It's not anything about, it's a control system to try to stop that. And has major implications. But if you buy into what I just said, which is true because you're part of this, part of it. You're part of both sides of it. As anything you do. Right now, you're doing this podcast to try to deliver value. And that value now can touch millions of people. Whereas if you tried to do this 20 years ago, you might have been able to touch 10 people or 20 people or in your local region, and it would have cost a lot more because you would have had to rent a hall to do it. Right. So now, so we're all part of this solution, and we're always looking to create more value. That value feeds back on itself through us acting in coordination around the world, and the output of that in anything that wasn't manipulated would be the entire population of the planet gets richer every year, even if they don't work.
Jeff, I don't know that I've ever heard your Bitcoin origin story. Did you come to Bitcoin as a technology or as a solution to this broken financial system?
As a solution to this broken financial system, I then and then even in the technology of Bitcoin, I realized that most people were looking at the technology rather than as a protocol. And protocols, and that would make sense. That would make sense because we see technologies more often than we see protocols, and so most people would not understand the depth of a protocol change like this, and how something that was permissionless, open, decentralized, and secure, bounded by energy, how that would impose new rules on society, regardless of if you agreed with those rules or not. If you want to price your world in pieces of paper, if you want to price your world in a government expanding to be able to try to create more monetary supply to be able to trick people, and something is bounded by energy and is decentralized and secure, it doesn't actually care if you want to price your world through that. It's repricing it. So for me, I came in, I know technology broadly. I'm not, when I say technology, I don't code myself, but broadly, I kind of know the levers, and I think about things in in principles, and I've hired extensively across different domains in AI and all of technology. But I think I would probably think more in first principles, and then try to use that same thinking to try to break. Where would Bitcoin break? What would that look like? How would it come in layers? What would be next? What would be next? What would be next?
Jeff, so it sounds simple in a way when you explain it, right? You're saying, I identified that we're living in a society that's measuring different aspects of society through a manipulated currency and system, right? So it sounds quite maybe logical and simple that a solution to that is a monetary system that can't be manipulated. Why then still is it, do you think, so hard for so many people to grasp this? Is it?
Yeah, I can simply answer that question too. We don't. So until Bitcoin it has something, so it is decentralized and secure. Human history has never seen that together. Right? There is no prior. Throughout all of human history, take 5,000 years, it's longer than that, but take 5,000 years of kind of recorded human history, and look for a spot that had this something decentralized and secure, and there isn't a spot. So that meant currencies, you could go through time and you could say it is a truism that if a currency could be manipulated, by some to be able to steal a little bit of productivity that should flow to society. Not it might be, it would be, for sure. And then you put all of other currencies throughout time through that lens, and they always are. Like gold gets centralized, and then it gets changed, or the rate to currency gets changed to create that manipulation. All of these currencies have the same problem. So now all of our history books and anything ever written, economic systems, how economies are formed, all of the different ideas that sit on top of those, who wins the war, because the winners write the history books. What all of this looks like, all of our recorded history and everything we've ever looked at has all of these error codes within it, because we've never had something like this. And so I took a very deep dive on just about everything we've ever had gets manipulated, gets controlled. So I put that bar on Bitcoin and I said, it will be, it not might be, it will be broken, it will get controlled. And I tried to see where it would break. And then coming away from that, I realized it couldn't. It would get stronger and stronger, more decentralized and secure. And then I moved more of my time into it. But if you just say, why is this so hard? You don't have, I'd say, you don't have the mental lattice. People don't have the mental lattice in their brain. Like all your brain is a biological computer, and it's pattern recognition. And all of our, and you learn more from your neurons, since they say neurons that fire together wire together. So if your entire history is learning this history, or how economic systems work, or your house always goes up in value, and you didn't realize that it's actually your currency going down in value, that would be really easy to believe, rather than this new thing that imposed a different reality, because it was bounded by energy. It was bounded by energy, and you couldn't move it. So why this is so hard to understand, why I understand why it's so hard to see, understand why I try to meet people where they are, is of course they don't have the mental lattice to understand this, because it never existed before.
Yeah, and I mean, I don't know about you, Lynn, but I can certainly relate to that. I mean, some of these points you're touching on, Jeff. For me, I had tried simplifying remittances through Bitcoin at my first attempted company in 2014, and it was probably 5 or 6 years later that some of these like very massive clicks started actually settling in for me. So you know, what you're mentioning definitely resonates. It's not what you're taught. It's not what, I mean, I studied personally economics at a US university, and you know, it's just there's just no background or context for most of this, right?
Yeah, so, you have to unlearn a whole bunch of things you took for granted, and those unlearnings of those things are these big insights. When people say I'm falling down the rabbit hole, I like to think about this as kind of levels of knowledge through this. And some people are at 1, some people are at 2, some people are at 0, haven't started yet. They're still scared of this whole thing. But there's a lot of Bitcoiners at different levels of that. And each insight takes them to a new level on the new system that's emergent out of our actions in the new system. And as you start to get deeper and deeper in how profound that is and what that means in all aspects of our life, you never go back, right? Do you know any Bitcoiners that are starting to and then they go back, oh, I want to live in that other broken system of manipulation, and just never you just go deeper and deeper and deeper. So if that's true, and if it was true for you, Israel, and it was true for you, Lynn, it's true for me as well, then it's true for every single person we know, and every single person who is not yet a Bitcoiner too, and they're going to follow that same journey. How is it easier to understand that journey? It's easier to understand that journey from people who aren't full of themselves, who realize that they saw the same hypocrisy in themselves as they went through the journey too, and they can share those lessons on what that looked like. So I just try to for me, I just try to say, this is what it looked like. I thought something different before too, and over and unwinding that. And I just kind of, with vulnerability, show that path.
Speaking of the journey, a very common journey within Bitcoin is to look at Bitcoin and then get distracted by other technologies that are trying to improve upon Bitcoin and in the crypto space. I mean, I guess I was lucky because when I got in, there was only Bitcoin, and then Ethereum launched, and then everything else. How do you explain to? I mean, what would you say to people? I mean, and this is specifically talking to entrepreneurs and startups, and also investors that are looking at the space. But why is Bitcoin really the standard, and why should you not waste time on the other technologies that are diluting and really not adding anything to it? I mean, what is so different about Bitcoin that it doesn't need to be fixed by these other improvements?
Yeah, so I wrote an article it's called Finding Signal in a Noisy World, that described this, because this was one of those questions I got over and over and over again. And I described this at a first principles basis and why this is a protocol unlike anything else. So I'll put that in the show notes for people to go to, because I would say it's worth. What I think I've heard about that article is people need to read it 5, 6, 7 times before, at least specifically if they're in the crypto ecosystem, before it actually really clicks. But ultimately, if you had protocols come in layers, and the first layer, then each layer does something very unique and very narrow, and so the decentralization and security of Bitcoin in a blockchain, to be able to do that, the trade-off was it couldn't scale on the base layer. And because you could only choose 2 of 3 things in that triangle, Bitcoin or blockchain trilemma, to be able to solve it at a layer. So by nature, it could only do 5 to 7 transactions a second. Now, just imagine, you don't have to imagine very hard. You hold Bitcoin, and you're getting richer and richer and richer, while the west of the world is kind of disintegrating into decay of the financial system. And then that would obviously create a free market of people that would say, I can create a better Bitcoin naturally. Right, because and a whole bunch of people in Bitcoin, if you just take Roger Ver or Vitalik, who was in Bitcoin, and all of these ideas that I'm going to create the new, better Bitcoin that would, whether it's bigger blocks, whether it's I'm going to add more functionality, which is really trying to solve scalability through the first layer. But the trade-off in scalability in the first layer is centralization or security vulnerability. So now you ask yourself, on any of these other things, now, and there were some hardcore Bitcoiners, and this is probably before I was really understanding that it showed how decentralized and secure this is, because no matter against how much money and power and everything else, the small blocks won. And why they won is because those people realized that if you made bigger blocks at that time, then it would centralize around people who could pay for the compute power to be able to do that. So the small blocks won, and that was kind of the wars of 2017. That Bitcoin and then Bitcoin Cash kind of emerged from that. And you could just look at the evidence on what won, and that meant the nodes, individual small actors in the network, kept it decentralized and secure against massive power to co-opt it. It's an important insight in when you understand Bitcoin, because the power to co-opt it doesn't exist. Lots of people will try, but every time they try, they actually end up, if you try to co-opt an honest network, you're the one that is destroyed. And that's never happened in history before. If you had more money and power, you could buy people and you could create more money and power. And so it's kind of a profound insight that carries on with Bitcoin. It is not controlled by the miners. It's not controlled by the money. It's controlled by the nodes. Who are the nodes? They're you, me, Israel. They're us. They're individual actors that are choosing what they know, decentralized and security, how important that is for humanity, and how important it is to retain that. And they're constantly vigilant against where are their vulnerabilities. So they're putting their time into closing these vulnerabilities all the time, like I am. And as you understand the importance of that humanity, you realize why this is so incorruptible is because those people are incorruptible. And those people understand, and there's now not 10 of them, there's hundreds of thousands of them. And pretty soon there'll be millions of them, and then tens of millions of them that are going to be doing the same thing. So, but going back to your question, if you could convince somebody that now I have a faster, better Bitcoin, that would sound to people who think through technology, because that's how technology happens, right? I had MySpace and then I had Facebook and I have the better version. It would be a really easy narrative to convince people that I have a better Bitcoin who want to get on the ride to have that wealth. So they would trade that, and it would be totally natural in a free market that then the next one, they would just explode, and it would confuse people even greater because they would be thinking through technology. They would be thinking through technology, blockchain, crypto, Web3 versus protocol. And protocols come in layers.
Okay, so you've done a great job explaining the why a decentralized and secure network is the standard, which is, of course, Bitcoin, to Lynn's point here, versus the other technologies that kind of, hype similar functionality.
Let me just finish. All of those other ones are going to zero. And this is not, it might take some time, but they are all going to zero. So if your trade on Bitcoin is to make more money, so I understand why people do this, because they're either getting punished in an existing fiat system, and they're trying to make more money quickly, and they're gambling because they're not deep enough on this. And so I hope in your podcast, and others that are honest actors within this, you're going to teach this to people, because it's not just making money. They'll make a lot of money. Bitcoin, their world will change, but they'll hold that money and their life will change because of what they're doing in Bitcoin. And that's probably the more important, profound change that comes.
And that's actually a bit where I was heading with this, Jeff. I mean, it sounds like what you're saying is, which is the exciting part of all of this, right? And I hope that is very clear, which I'd love for you to paint paint the picture. But you're saying money, productivity, as a society, these things are going to flow from a manipulated or corrupted system into an honest system, right? So why is it so opportune to be plugging into the network now, to be immersing yourself in this other option B that exists?
Well, you could answer that in any number of ways. I would. One way is this: what would you expect your life to look like? The reflection of your life to look like if you were building on an honest layer versus a dishonest layer? What would you expect your friends to look like that were building on an honest layer? What would you expect commerce to look like on an honest layer versus a dishonest layer? What would that life look like? And then kind of invert them and say, what if there was theft in money, and that theft in money had to grow greater and greater and greater, and most people weren't aware of it, and they gave their time to that theft in money? What would that life look like? So if you just at the base level, that's why, right? It's really simple. Your life will get way better, and you'll be around more people, and we're really early in this process, and the world will heal as a result of our emergent action on an honest layer. If you don't want to do that, if you want to live in the dishonest layer and judge the world and measure what's happening in the world and stay yelling at the world that's getting worse and worse, you're welcome to do that. But it's the honest layer is repricing the dishonest one anyways. So your time is you're going to find yourself more fearful, more angry, more in one system, and in the other system you'll find yourself more hopeful, more abundance, more truthful. So just ask yourself, what reflection of the world would you want to see? What would a human action look like on both of those layers? And judge for yourself where you want to spend more time.
Jeff, that reminds me of some of the interviews and talks that you've given about your own journey and kind of and how you started Ego Death Capital in an effort to spend more time in the system that you kept seeing more clearly. And you obviously were a very important player in other technology boards of other companies and spending time in that system while you were thinking about Bitcoin. Can you share with us a little bit about your journey of how you started Ego Death and the motivation behind that and spending more time in this world you want to be a part of and to see grow?
Yeah, so I tell this often, but I realized one day I woke up and I realized how much of a hypocrite I was. And I was on these boards. I was actually on some environmental tech boards, all sorts of technology boards, and you knew. I talked about it all the time. That every single advantage you created there had to be consumed with more money printing to keep and to keep the inflationary kind of treadmill going. So you couldn't solve the problem from there. And I was talking about this over and over and over again. And I was and speaking all over the world on it, speaking to heads of state about it. I wrote a book on it, and waking up kind of one night in a cold sweat, realizing I'm a total hypocrite, because all of my time and energy is in this other system. And I have a hedge, or I say 90% of my time is in this other system and 10% of my time is in Bitcoin. Talking about it having a hedge against the system collapse. But I, in effect, was making the system collapse happen faster, right? By spending all of my time in the other system while I had a hedge against it. And that was that hypocrisy, or that incongruence in my words and actions, hit me like a brick. And so that was my impetus to want to move my time into spending my best time, my most valuable time, helping other entrepreneurs create value within the ecosystem that I wanted to see move forward faster.
And the fund itself, Jeff, you guys launched in 2021, was it?
When was it? I think 2022. In probably October, November of 2021, Nico, Andy, and I started talking about this, and then I think we launched the fundraising of it in January of maybe maybe it was a little bit later, but March or something of 22.
Did you hit any walls or challenges in the initial fundraising stages, Jeff? I mean, as far as people saying, well, I just want to, why not just invest in the asset? Why am I going to invest in companies that are building so early on in this?
So yes, in fact, our fund, we had it capped at 30 million, and we had, just from a note I put online, and the inbound demand, we had about 40 million committed, and so we were going to raise the amount, and then FTX and all of the blowups started happening in the broader crypto space, and I think our first close was actually 12 million, but we'd already told everybody it was closed, so we stopped, and so that now you had to kind of let people know quietly that it was still open. So that was brutal. It was the first fund we'd ever created. So you learn a lot through that. But we did end up closing, I think, 27.5 million, and then another 7.5 million for an SPV for Fedi. So it actually all came together. But it took a lot longer, and it was more effort than I thought.
And I mean, the way I'm, having been in traditional VC and now looking at the opportunities in the space, I'm sure that you think about this too differently. I mean, it's got to totally change, or maybe revert VC to what it originally was, where you're long-term partners with your companies that you're supporting, and you have the the longer, the higher time preference that, or the lower time preference that that you really want to be a partner with them. And so how do you think about BC, the way you want to be a part of it in Ego Death versus what we're seeing in the traditional VC industry right now?
So very much like you just described. In fact, in Costa Rica, I was sitting with Jack Dorsey one night. We spent about 3 hours talking very much about what you just described, how the perverse incentives against the existing fiat system creates all this short-termism. And it's really, they say the long-term game, let's do this, but it's all, how do you make as much money as you can, as fast as you can? It doesn't matter what ends up happening. I'm out. I sell it to public shareholders and I'm out, or whatever that looks like. And I don't want to, it sounds like a generalization, but when you actually raise, because I've raised money from that, and the incentives are so strong that they accrue to that, so that, and it just gets worse and worse and worse. So a lot of the actors, a lot of the people within that space get co-opted by the same incentives. And it's as an entrepreneur, it's brutal. It's brutal because it's not like you're not even in the room. You say one thing, do another, right? And so the boards look like that. It's just it's not pleasant at all. And I think it destroys a lot of value in that it creates short-term, but you're creating short-term value you're creating short-term value in almost a prisoner's dilemma game. Every single person on earth, the game is getting worse for, and people think they're winning that game. And they can feel it. They can feel it emotionally, like they're scarred emotionally because of they think they're winning as the whole world's burning around them and it's getting worse and worse, and they're still stuck in that game. The opposite, so trying to think through what it would look like in a venture fund that had the exact opposite dynamic, how every single node in this network made every other node in this network stronger. And how would you treat entrepreneurs if you knew it was going to be a lot longer path, and they would, some of the first technology that they might build that would have a lot of value would then go to zero in value in Bitcoin terms. They would have to build more value for customers. And so that would have to take an entirely different approach in thinking about the entrepreneur. You would have to care about them deeply, because you would be setting up a long-term partnership to try to help them. And when I say care about them deeply, I mean, it couldn't be about you. It would have to be about them, and what they were doing and how it fulfilling their value to society and other people, so that you could help them with the hard lessons along the way that they're bound to happen. Instead of coming in, you need to do this. Here's where I hit this wall before, and here's what it looked like for me. So you had to. So in every facet of the venture capital company and what that looks like needs to be re-engineered to be able to support that. So you can't block people out by fiat money instruments. You can't put in this system. You have to be a good actor. And on a sector, and it's hard to create monopolies in this because you constantly under threat of providing more value. And when I say threat, I think that's the best in us, right? That's what a free market should look like, in service of other people, solving problems in service of other people. And when you solve problems in service of other people, you do well and they do well.
Yeah, Lynn and I have discussed this ourselves quite a bit, how we do see this as a pretty transformational shift in how a company is funded, right? This whole VC model you speak of, Jeff. So you, Fund 1, I believe, correct me if I'm wrong, you were focusing on earlier stage funding of Bitcoin companies. Fund 2, I believe I listened to some of your publications that it was going to be more of a seed, or sorry, more of an A round. Yep. Yeah. And how do you view? And we've had a lot of conversations around the topic of early stage Bitcoin companies holding Bitcoin at when that moment makes sense and using it as a treasury management tool, and how perhaps some of these the companies that do it well and are successful at this might not need, later stage financing like a traditionally tech company might. How do you see these stages of the fundraising, kind of growing out as the years go by in this?
Israel, that's a really good question, because I think it's really misunderstood. In our, I cannot believe the portfolio value in our first fund, even though some of that hasn't been marked up yet because they haven't had to raise more dollars. In other words, in this ecosystem, a lot of times you go to from seed to profitability, massive growth in profitability in Bitcoin terms. So if you assume that the Bitcoin IRR for the last 14 years, 15 years has been 45% IRR, and you know that it's repricing the existing system instead of the other way around, if you invert the unit and you say Bitcoin's repricing the world, my house is falling in Bitcoin terms, energy prices are falling in Bitcoin terms, all prices are falling in Bitcoin terms, essentially matching my thesis, rather than it's going up against fiat dollars being debased, then you realize Bitcoin's IRR for the next 15 years is going to also be 45%, as long as it stays decentralized and secure. So how could you beat that IRR? You just should hold Bitcoin. The only way to beat that IRR is by investing in Bitcoin companies that then they're building profitability in Bitcoin terms and denominating their balance sheet in Bitcoin terms. It's almost like being in Argentina in 2000 and being able to invest in Google and Google's cash flows in the US, right? So you're taking a devaluing currency that's going to devalue really fast, and you're converting it to a tech company, which cash flows are in US dollars. So you're getting a double lift. That's what's happening with all currencies relative to Bitcoin right now. And the opportunity within Bitcoin companies to be able to create venture type returns. But there's two of our companies in less than 2 years and the fund has been operating for 2 years. There's two of our companies, so that's not even our first investment, this other investment, that are already very profitable in building their balance sheets each month and more Bitcoin. And the other ones behind that aren't very far behind, right? And massive opportunities. Why? Because they're providing incredible value on top of a network that's exploding. So now in a Series A fund, and why we had to do that, why we specifically chose 30 million when we first opened this fund, is we realized that some of the capital in this ecosystem had raised two big funds, and they did it to try to gain fees. And the ecosystem wasn't large enough at the time. So what they had to do to gain fees is deploy broadly across a whole bunch of nonsense to be able to, and then once you've done that, you have to defend the nonsense because you're part of it. We wanted to be really focused in helping this ecosystem develop and thrive. Then we could go into another fund that could follow on to some of the ones that had reached that point. So that's where we are in the A fund, and so we opened that up, or the fundraising part of it, in I guess it was January, early February, and we're going to do our first close. I think the first close comes next week or the following week, but it's going extraordinarily well. I would say it's going better than our first fund.
Well, congratulations on that. I mean, Israel and I get really excited about when we have these conversations amongst ourselves and also with our guests about this whole space, remaking VC, remaking the startup path. And the other part of the startup path, which ties back to VC, are exits. How do you look at the long-term exit for a portfolio company? I mean, and one of the conversations I'll just reference this quickly is Bob Burnett, who has Barefoot Mining, and he's very vocal about never going public with his company because he thinks it's out of alignment with the values of what a miner should be. Totally different conversation. But if you're taking in investor money and you never have a traditional path of a public exit, what is the trajectory? Is that just returning capital to the investors, or how are you looking at that for both your portfolio companies back to ego death and also for ego death back to your LPs?
Yeah. So yeah, I think through the terms of Bitcoin. So I think about this as accumulating more Bitcoin through companies that are providing value and doing it in the most capital efficient way. That's how I think about it. Now, regulation and such requires today investing in fiat. But that means if somebody it's actually probably better for investors because you don't want to sell your Bitcoin to be able to invest, and you don't want a capital gains. You don't want a tax event on this. But also, we know Bitcoin relative to fiat is going to go up in value a lot. So that means by investing in fiat, you take advantage of capital calls, which come over 4 years to be able to essentially own more Bitcoin while you're doing it. And then so that's is for LPs in the fund. Now returning that capital, we don't know. So some of these will exit because it'll be the right thing to do, and they might exit for public company multiple. Some might turn into utilities that almost must-own utilities that in Bitcoin that are constantly generating more Bitcoin because of they're providing so much value. And my own personal intention is I wouldn't really want to sell that. My personal intention is I would want to dividend it out forever. Now, each one of our LPs might make a different choice on that. And there will obviously be buyers to be able to sell it out. But I know what I would want to do. And then the third thing is this market is going to shift really quickly. Different regions, different as game theory plays out around the world, and you could see a new market that is not anything like the financialization of the existing market, the public market, that is built on the Bitcoin rails. Where you could see that emerge that gives totally different type of opportunity for this ecosystem. I expect that to happen. I just don't know the time frame of what that happens. So we're kind of open to all of these options as we go forward.
And do you expect to see a lot more funds, Bitcoin-focused funds, popping up, Jeff? I mean, it sounds like it's a very opportune moment in the stage of adoption and growth of the Bitcoin standard and ecosystem. And it sounds like, and you spoke to this earlier, that it applies to both companies and investors and just basically anyone involved in the Bitcoin network, right? That each node benefits each other. How quickly do you see this space growing from that point of view?
I've been super surprised that it hasn't grown faster. Like, it's so surprised. And I think it hasn't grown faster because there's so much essentially destruction of capital happening in crypto, but it looks like short-term people are winning with these tokens. That tons of capital is chasing crypto or Web3 because they don't understand the nature of this protocol, that it's repricing all of that, and it's all this short-term capital. No Bitcoin company worth their salt would take that money. They wouldn't take it because there's a misalignment. So the Bitcoin VCs, and it's not just us, it's 1031, Stillmark, Time Chain, Fulgur Ventures. There's a bunch of other, like some really great other people in the space. We just have an additional value that kind of looks very different, and I'm quite surprised that there's not way more people, because the returns are going to be so much better by healing the world, by providing real value, long-term value, because you're denominating those returns in Bitcoin. You're building, then you have different strategies in different venture funds, different strategies within companies, which ones can do better. We'll see what that looks like over time. But that path, I honestly, Israel, I'm blown away that there's not more capital racing after this, because it's so obvious. At least it's so obvious to me. And our early returns and our early portfolio companies are proving it out. Like, our thesis is obviously correct.
Yeah, I agree with you, but I think probably there are very few investors that have the lens that you have. I mean, it takes a lot of effort to really get to the level of understanding Bitcoin and what the potential is. And so the traditional VC will need to do, we'll need to go down that rabbit hole and really learn it to understand the protocol, how it fixes finance, to get over the hurdles of how that technology can be broken.
And probably more importantly, like as important as all that is, how to treat entrepreneurs to be able to make them successful, which is very different than and that gives the people in this sector that think like that a massive advantage to accelerate, because it really does create win-win-win for everyone. And so, like, when I think about our deal flow, we get to see everything. We get to see absolutely everything, and we get to spend a lot of time, and even stuff that we don't invest in, that we try to help those entrepreneurs connect them to others, because the whole thing is everybody wins by it. It's remarkable. It's a very different paradigm.
In my social circle, people think I'm a little nutty for being so all in on Bitcoin. And so, but one of the things that really gives me the confidence that I know I'm on the right path is the level of intelligence and integrity that I find across almost everybody involved in Bitcoin. And it is such a refreshing community to be a part of, that I just feel like I've never seen a group so diverse, but yet that has such great values and really wants to help fix the world, and really super smart people. I'm sure you see that too. Can you tell me a little bit about what you're seeing in terms of the entrepreneurs, and especially the types of companies they're building? So are there any particular verticals or problems that are being solved by the companies that you're seeing? We just talked broadly about companies that haven't been very specific.
Yeah, and I mentioned earlier, I was early in the internet, and I saw this play out. And one of the reasons what attracted me to the internet is I needed to be a part of that, what was happening, just how smart the people were, what this looked like, how critical thinking, and then also watching it get co-opted by money and bad incentives. So I saw both of those things, and I never thought I'd have a chance to play that game again. But Bitcoin is like, it's an order of magnitude greater than that other game. When I see what I see here in people, and the intelligence and what this looks like, it's actually it's so remarkable, because you wouldn't know it unless you were in the system, right? So actually, by creating the VC, by creating Ego Death, this all came to us, and we got to see it at a totally new level. And some of those entrepreneurs, if I look at what Obi's doing with Fedi, you have a completely scalable to 8 billion people solution that is already built. That people are talking about Lightning can't scale, and layer 2 can't scale, and all this kludgy nonsense with tokens right now. And the solution is actually already built in beta, soon to be launched, that gives you unlimited scalability to Bitcoin. And we saw this, like, and so when you know who Obi is, and when you know who the rest of the team there, you saw this years ago. And so we were able to, like, you start to integrate with some of the just remarkable entrepreneurs and how they're going to solve this at different layers, and that all came to us rather than us going and searching. We wouldn't have seen it unless we were deep into this ecosystem. So like examples like that, they're all over the place. LN Markets, their rate of growth on using Lightning or Bitcoin as a derivative as exchange, where there's no counterparty risk, is remarkable. And so many companies rebuilding the entirety of all of commerce on top of this. Maybe this is actually probably an interesting point to look at, that tied to your conversation, that I don't think people know. If you realize that Bitcoin is repricing the world, and it's moving to a free market, and all prices are relative to Bitcoin, and you're deep down this path, you have an investment thesis. Okay, what accelerates that? What are the types of companies that are valuable in that environment? And it looks one path. If you believe that all of wealth comes through financialization and more financialization, then you're in crypto and you're trying to do houses to asset value tokens onto the blockchain. You're trying to financialize greater. And that's a very huge divide right now in the community. And here's why I'd say that, why it's important distinction point. Today, if all of your wealth has always come from that financialization, and a house actually hasn't gone up in value, it's gone down relative to currency, and instead of being a utility value, or currency value has gone down, and the house has gone up as a result. And instead of a house becoming being a utility value where it was 70 years ago, it's become a store of value, because if you hold your money in the bank, you lose money. And so more and more people are leveraging those assets. And what you would say by that leverage against the broken financial system is they're massively overpriced because they're acting as stores of value instead of utilities, right? And so if you're measuring from that system, what you're thinking is, how do I get more of that? But the way I use the example of my house falling from 300 Bitcoin to 22 Bitcoin in the last 4 years, it's repricing all of those assets to a utility value. It's removing the financialization of this in Bitcoin. And so some people are thinking, okay, I need more houses, and a way to extract more financialization is to tokenize those, so leverage those and everything else to get more people into it. And some people are thinking, wait, the actual energy bounded by Bitcoin is repricing all of this. And so those two theses, depending which one you were in, would be massively different. And so we're in the one that Bitcoin's repricing everything, and you're seeing crazy opportunity to do so all across the board.
And all across the board, by the way, Jeff, out of curiosity, any geographical insights that you're seeing as far as where these companies are being built?
We just made our first investment in Brazil. We have investments in Switzerland, US. I personally do have a couple in Africa. So it is really a global phenomenon. Some of the top talent still has either been close to the U.S. system because they've seen the movie and they realize what's happening, or and then at least in scalable talent, right, or in scaling things. But then you have these pockets of opportunity wherever you are in the world, like Africa, and some of the most brilliant entrepreneurs I've ever met there. But so far, they don't have the ecosystem around them to be able to thrive. And so in some of what we do, we try to help provide that ecosystem and other players around them to help them thrive.
Yeah, it is uneven in terms of opportunity or problems that are being solved. So I'm based in Mexico City, and so I'm more familiar with the LATAM and the fintechs that have been trying to solve problems. And there's a lot of them, but which means there's a lot of opportunities in the number of unbanked and people who've not yet entered the financial system because they've been excluded from it. And now this gives the opportunity. So I think depending on where you are in the world, there's just to your point, there's so much opportunity. I can't understand why more investors aren't seeing it, and why more entrepreneurs aren't building on it. Could you, as we start to close up, Jeff, can you give some words of wisdom or advice to either entrepreneurs thinking about where they should be putting their time and effort, or for investors about where they should be deploying their capital? I think you kind of addressed that one.
Yeah. The thinking in this space on what delivers value for a long term is, I think it takes a lot of time to do that. And if you're investing just kind of as a retail investor in this, you might just get burned because there's just so much going on. I'll use a wallet as an example. How do you make money as a wallet, right? Because it's interoperability across the entire, it's at the protocol level. And all of these things are services on that protocol level layer. So where does the value come from if you can insert a new wallet tomorrow? Or if the new wallet offers functionality for 3 months that another wallets don't do, and then all other wallets copy the same thing. All of those prices go to zero. And so they offer tremendous value, but for all users, and everyone gets value, but it's hard to create a business, a long-term viable business there. So you have to think about where the next step of the value creation is, and what's the next step of value creation from what you're doing, and then how these things come together. So an example would be early in the internet, everybody just tried to copy the last thing that was there before the internet. And then as these things come together, we get that. Right? Instead of more phones, we get something that is a communication device. It's your music player. It's everything all in one, and it's your app store that has everything else instead of a phone. So we're right now, there's a lot of phones, Twitter clone, this clone, there's a lot of that. But underlying the technology build has opportunities to create so much immense value that's it's actually hard to even describe today. Those entrepreneurs, all these shots on nets are actually creating this, and there's these pockets that just come out of nowhere that provide this value. I think actually Fedi is going to be one of those, but it's one of those because it's integrated it's enabled by Lightning, it's enabled by Nostr, it's enabled by privacy and eCash, and it offers something that was never able to happen before some of these other layers. These layers came in, but there are lots of others too. So when you see Bitcoin, Nostr, Lightning, Liquid, Fediment, between there, different things together, then create new opportunities and a whole bunch of amazing new opportunities. So understanding how these are each evolving, not just singularity. Each of these protocols are not just singularity, but in combination with other things in this ecosystem is an important, I'd say, skill set.
Great. Well, Jeff, maybe one last question I'd like to run by you. What would you say to an aspiring entrepreneur who's maybe on the fence of taking that step and building on the Bitcoin network and dedicating their time to this space?
So it depends on where you are. When you say aspiring entrepreneur, it doesn't actually take very much to move into this space, right? It's an open permissionless protocol. I'm going to broaden what you just asked. And so how do you move 1% of your time to 2%? If you're at 2% of your time, how do you move to 4%? If you're 4%, how do you move to 8%? If you're 0% of your time in Bitcoin right now and you want to move to be an entrepreneur in Bitcoin, I would suggest don't do it yet. Move your time and understand why and where the value is, because you'll probably misallocate your time to something that would look like the financialization when it's moving the other way. So understand, if you're an entrepreneur at that level, or if you're anyone at that level, living most of your time in the existing system, move some of your time, go to a meetup, go meet other people in this, so watch some podcasts of people like you that are teaching this at a deeper level. Then go to 4%, run a node, run your own node, and be a part of this network to understand how this works at all. As you move more time, you're going to see, just like I did, way more opportunity. That opportunity is there's lots of problems in the world. What do entrepreneurs do best? They solve problems for people. So then find the thing that you're most passionate about, or the problem you're most passionate about, and go and solve that problem if you wanted to solve that problem. Or find another company that you're really excited about that wants it. I know Bitcoin companies, they want to hire more Bitcoiners because they don't have to train them on Bitcoin. Their values aligned, everything's aligned. Now does a skill set work for the company. So if you don't want to start something yet, go and find a job at one of the Bitcoin companies that's growing like crazy that you love, and help them achieve their vision together. That would be largely the advice there. Just start spending more time in that ecosystem, and you'll see more opportunities.
Jeff, any final thoughts or any upcoming speaking engagements? I had the pleasure listening to you Portland event, and I know you were just in Oslo.
I'll be at Pacific Bitcoin, but that's my next one. Yeah,
Great.
it was really great to see you there. By the way, Lynn.
Yeah. Well, thank you so much. I have to tell you that I'm a big list user, so my daily to-do list has truth, hope, and abundance on the top of it every day. I write that down because those words that you have said over and over and over again, they really resonate with me. And it's what led me to move my time fully into the Bitcoin space from traditional. So I owe you a big debt of gratitude too for inspiring me.
Awesome.
It's a pleasure to be able to have this conversation, Jeff. So we appreciate it.
It's my pleasure. It's right back at you. Right, this is like, it's selfish. I can't believe I get to do it with all of these amazing people who also choose to do it. So it's awesome.